Hello everyone, welcome back to Market Update featuring by Marketsall and Rationale. In today's video, I would like to talk about the weakening USD narrative, weakening USD story a bit. I wanna dig into what's the sources behind this activity started from the end of 2024 up until now. As you can see, the USD came from approximately 10 to $96. As you can see, first of all, this monthly chart, this parallel channel, is the technical side that I'm monitoring the USD. But before switching to this side, I would like to talk about what could be the reasons behind that. First of all, since the beginning of Donald Trump got elected, the main mentality is all these discussions going on about the new tax bill, tariffs and stuff. All the mindset is by weakening dollar, boosting the economic growth and compensating the US deficit, which is like the total debt is around $34 trillion. And this year's interest payment, I think that if I'm mistaken, I'm sorry for that, but it's around like a 3 trillion USD. And all discussions going on, especially it's also like between, for example, currently between Scott Bessent and Elon Musk, is also the way to handle this deficit. So the Donald Trump side, which is like a Bessent side, is supporting the idea that by cutting taxes and weakening the USD, they will be able to, alongside with the accompanying lower rates, they will boost the economy and they will be much more economic activity. They will be much more hiring. In that way, they will secure the labor market. And while doing this, they will try to the one side of controlling the inflation is going through the oil prices. Through the OPEC Plus, they're trying to control the oil prices. That's why they are more in the they're having more balanced impact on the tensions rising in the Middle East, because they need to control the inflation, especially through the oil prices. That's for sure. So I'm just monitoring this chart with this mindset. One other side of this, I mean, the main goal is there is an ongoing, especially after Trump got elected, financial nationalism around the world. All countries are trying to get capital inflows to their country in such circumstances. The trade war is just kind of a symptom of this mindset. As this was, for example, a similar version, the more political version, had happened just after the First World War, which also led to happen the Second World War. I mean, this case is a bit different for sure, but we saw. I mean, maybe the way it happens is different. That's debatable for sure. But what I'm trying to say is, by weakening dollar, US trying to attract all like a capital to invest in US, money to come back to US, and the weakening the USD is one part of this. So, for example, with this mindset, if you look this chart, I had mentioned this, for example, also if you're following me through the X platform, I had mentioned this monthly chart. You know, that's to show that I'm monitoring the circumstance of USD like this. And my intention was not saying that the USD was going to bounce from here, because this seems like a strong trend line. No, my goal is to give the idea that I'm monitoring this, and if we see a breakdown, then technically we can say that the USD still has room to go down up until, let's say, 90 levels. That was my main mentality when I was sharing this chart. And the upcoming, last week we received PC numbers. This week we're going to receive non-farm payroll number, which is more important, especially with the latest PC number. We received really like a bit weak personal spending, and this personal spending might have some impact on labor market, economic activity side, which we might see in the non-farm payroll number that we're going to receive on this week. And next week there's going to be US inflation number, which is important in terms of, if you remember, we started to see some upward movement in good inflation. The good inflation part was the part that Fed had a victory as earlier than the service side, right? And it's coming a bit high right now. I mean, according to latest data, that's why we need to monitor that part. But so the general picture that I am trying to shape here is the main reason behind this dollar weakening is this kind of financial nationalism going around, and by this way they're trying to attract capital to US, and with the accompanying rate cuts that is constantly keep being asked from Donald Trump, from Fed, to cut rates. That's the main mentality. And they will boost the economy, they will boost the GDP, and they believe that with this boost, the amount that is lost from tax cuts be compensated from this economic GDP growth. That's the main mindset. That's how they're going to repay the deficit, which is a rise from $34 trillion US debt. So I now want to show you some trade ideas that we had mentioned in these videos that acted pretty well, which because they were mainly about being bearish in USD. And so according to that, I will try to evaluate if those trade ideas are still there. I mean, if I'm still expecting them to go in the direction that we had mentioned. First of all, let me start with EURUSD. I think the first trade idea that I had mentioned was this consolidation, this rectangle chart pattern. And it worked pretty well, pulled back to the short-term moving average, then it resumed its movement. And second one, I think this cup with handle chart pattern was the one that I had mentioned in previous two videos. And as you can see, after a nice breakout, it's moving pretty well. My concern on Euro is more about not on the US side, but more about Euro side. As you might recall, that this huge boost was sourced by this 500 billion euro expenditure will be done by Eurozone side for the defense expenses. After that, we saw this huge movement up until here, right? So if that narrative is already done, Eurozone also is cutting, they're also cutting rates. So I'm questioning what will be the supportive idea for Euro. It seems to me like for sure this 500 billion expenditure was the booster, but I'm questioning that maybe the capital outflow from USD couldn't find a better alternative. That's why it went to Euro or Pound. Okay, we saw some appreciation in gold for sure, but also like US indices lately after tariff things got calm. But what I'm trying to say is I'm having some difficulty to find more supportive narrative for Euro side, especially within the context that they will be cutting rates alongside the US. And yeah, and when you come to Pound, for example, this was the trade idea that I had mentioned after the breakout in this cup with handle chart. Then we saw this pullback and acting pretty nice for now. And still I'm having the same mentality. If you had gains really if you're in profit, you might be more careful. Maybe you can get some portion of your profit, because and as we are in the for example, one of the this level might act as a resistance for sure. But apart from that, as I mentioned, I couldn't see any better narrative for Pound as well. Let me switch to gold. after this huge breakout, we had mentioned this symmetrical triangle, or you might call this like a bullish flag, and another bullish flag is formed here. When you come to daily chart, you can call it symmetrical triangle chart pattern. As I mentioned in previous videos, I want to repeat again, any kind of correction to, let me show you in the weekly chart, to this, for example, as you can see, this 10-week moving average is carrying this trend. Any kind of correction is still a buy point for me in an environment where rates are like being cut on the US side, real rates are coming down, and in such an environment I don't see any reason, especially geopolitical tension is not done yet. In such an environment I don't see a firm reason to sell gold or not to position. But yeah, you can also for sure question this after this kind of huge trend, what could be the top, who knows. But we're just trying to examine this here technically, chart by chart, and now I'm monitoring this daily symmetrical chart pattern. When you come to the silver chart, our trade idea was this rectangle chart pattern, and this I had mentioned this part as an early entry, and the second entry was here, and now is pulling back to the short-term moving average. And it's so silver has another future to be used in production in the factories, right? Especially in the like a semiconductor area and stuff. So also it has the ability to act as a precious metal. That's why in the phase of the rate cuts, we might see the further appreciation. Plus, we might expect silver to catch up gold because it didn't do the same price action as the gold. That's three major points that I can support the long silver trade idea, and I'm still bullish on this side. Any kind of convergence to short term is like a nice area to be positioned, and you can have stop loss around $32 levels. Another trade idea was this Dow Jones futures head and shoulder bottom chart pattern, and I was mentioning this kind of breakout might be a good opportunity, and the pullback was really nice. And after the pullback, as you can see here, we see three bullish candle, and currently while I'm recording this video, it's being really like selling a bit. And the other one was mini Russell 2000 index futures. This was a small cap index for the ones that don't know, but the trade idea behind this is potential sector rotation. It's betting on this is also betting on catching up of the stocks that couldn't perform as the big stocks performed, right? That's the main mentality. So, and there was this head and shoulder bottom chart pattern, and after the breakout, there was a pullback, and that pullback saw some rejection from the short-term moving average, as you can see. And the trade idea was to have a stop around like a 2040 levels. And if you are able to ride this trade up until this previous high, which might act as a resistance, then it will give you 1 to 3 risk reward, which seems pretty nice. And oil was another trade idea that I kept mentioned in previous videos, which I was mistaken due to the catalyst of war between Iran and Israel. I was mentioning this descending triangle chart pattern, and it break down, pulled back, and I was telling that to be short in any kind of pullback just below this support level. But then with the war, we saw this action. I was mistaken for sure, but at least I can say that the downtrend line acted as resistance to this movement. And still I'm bearish within the context of the inflation should be under control for the sake of US government's current situation, because the gas prices are really it's pretty important, and they're really pretty decisive on US politics. And in order to if they wanna just in ruling the if they just wanna be in the be the Republicans want to be administration, they need to control the US inflation. And through OPEC Plus, through their ally Saudi Arabia, they're controlling the supply. And due to the supply and demand balance, I'm still bearish on oil prices. They wouldn't like to have higher oil prices, especially in an environment they keep asking cutting rates, which will boost the economy, and it will lead to some inflation, and that's why you need to compensate the inflation that might arise from there. So the main plan is, by boosting the economic growth, by boosting the GDP, they will compensate tax cuts, and the inflation that might arise from that increasing GDP will be compensated through oil prices. That's the plan that I can see for now. We'll see if they're gonna succeed. It's a bit tough I think, because the inflation, especially tariffs, who knows the impact of tariffs on the inflation side might come powerful. That's why the CPI number that we will receive on next week will be important, especially good inflation that I will be checking, because good inflation had shown some sign that it was rising a bit, and that's why we need to monitor it closely. And Bitcoin, you can just this was another trade idea that I'm mentioning, and there's a cup with handless chart pattern is being formed here. We might see some more consolidation around here. That will be also a converging to this trend line, and then with the rates coming down, especially the expectation for 2026, I don't see any downward price movement in cryptos, but for sure in any kind of unexpected recessionary economic data will for sure boost the US dollar. And in such an environment, rates being coming down will not be as powerful as US dollar price movement, and in that scenario we might see some depreciation in cryptos or risky assets in equity markets. And lastly, I just want to talk about Nike Nike stock that appreciated around like 15% after the earnings. The earnings release was not that well, but the trust on the company management is still there, especially in an environment where tariffs are ongoing. Like the tariff deals are not set yet. The supply chain developments are developments done by the management are highly appreciated. That's why there's an optimism on that. I will rather to wait up until this level to see some rejection from the previous highs, and that in that scenario the price will be traded above all its moving averages. Then we saw some rejection, and that will be my area to be seeking to be long. And another trade idea is Uber, which is like seeing some boost with robotaxi also, and also robotaxi enhancements going on. Plus, as you can see here, there's a double bottoming technically, and cup and handle chart pattern is formed. When you go to this volume patterns, first of all, in a cup with handle chart pattern formations, generally we want to see some depreciation in the cup part around like a 35 to 40% maximum. And for the handle part, we would like to see some at least like maximum 15% decline. And while it declines, as you can see, the volume area here, this yellow line is the 50-day average of volume. And when the price declines, the sell volumes are lower than the average volume. This is a good sign. That means that supply is not coming that heavily on Uber when the stock is sold. So that's why in the case of a breakout, we might expect to see a strong breakout. And that's all I'm going to talk this week. I hope you find helpful whatever you see, whatever you listen here. I'm trying to explain as simple as possible my ideas, and if you find whatever you see valuable, we would appreciate if you like our videos and subscribe to the Marketsall YouTube channel. Also, you can find the subscription link for Rationale newsletter service just below the video if you just want to receive all these trade ideas directly to your inbox. And your support is so valuable for us, and I hope you have a really nice week, and good luck with your trades. Have a good one. Bye.